Morning, folks. Welcome to Tuesday. I'm going to go through a few things here. Natural gas has just rolled over on my broker, so we'll have a look at that and a couple of the other things, including stocks and gold and so on. I want to point out to you on this page, I've got my X channel, and you can go and follow me there. It's ArcisFX, that's the handle. And I've just started up this community. Now, I've made it open for 100 people. This is for my private members group. And if you go to my X channel, the first thing you've got to do is just follow me on X and then click on this link here, the private trading group. And what you should get is, I've already got access. There's a little button up here and you can just click on there. It should say join. Mine says join, and you'll get access to this group. There are about 63 people in here at the moment, and we'll get about 100, and then my private trading group as well. So once that's full, you'll have to be a member of my private trading group to be a part of this community. So you'll see this post when you join up for free, and it just says, welcome, stay tuned for exclusive and early posts, videos, live streams, and analysis. This community is brand new, and we shall have to figure out the best way we can use this tool to maximize exposure to good trading ideas. Membership is presently at my discretion, and the list will be adjusted according to participants fit in the community. Be nice to everyone and have fun. So if you haven't followed me on X and you're not a member of this community, now's your chance to do so. It's completely free. Now, my broker over at Black Bull rolled over today on the nat gas contracts, and I think we're at about just over $2 actually, interestingly. But that will probably recede as we move into the following contract. But I'm long on the Oanda ETF, and this is an ETF based on the front month and subsequent months and the cash price, and we don't know how they're calculated. But this is a continuous price. There's no rollover, and we're right at this trend line right now. With that rollover, we've just tipped over and we're at that resistance. We'll have a look at that on my futures charts shortly. I also put a post up on copper if you're interested in copper. And I also sent this to my private members over at YouTube and my private trading group. And this is an interesting one. I'm not currently trading it, but you can read that. It's pretty similar actually, and very interestingly to gold, uranium, and WTI and Brent crude actually. And you can see we've broken out through the top of the channel, just fallen back. And moving down towards there, you can read that comment on copper. I'm not trading this, so I'm not going to cover this in detail here. And then cocoa, everyone's been asking about cocoa. This hanging man, and I put this up a few days ago when we got that candle pattern. And yesterday we moved down, and today even further. We'll have a brief look at that on the charts as well. And I don't think there's much else, apart from I'm buying Tesla and Apple. We're also still short NASDAQ and Nvidia. We'll cover those shortly as well. And then just a couple of the videos from yesterday. If you haven't seen these videos on YouTube, I did 3 videos yesterday. You can go check those out. All right, now let's go and have a look at the charts. Let's start with currencies. The top row contains the 4-hour charts, and the bottom row contains the day charts. Look at the euro, just trying to base, this is the biggest component of the dollar index, into the support level and trying to base multiple reversal candles at that support. Now, I don't know what's going to happen next. Generally, I think I prefer dollar strength, but this does show some sort of attempt to base here. Not only is it this order block level, but there's the 78.6% Fibonacci. We touched it to the pip. This is my favorite Fibonacci, and if we are going to turn around, we must hold above 1.06. That's the 786 fib, and it's also this sort of basing area, and we, as I said, touched it to the pip. So I don't know on the euro. If I was trading this purely technically, I would say we've got a good attempt or good sign that we're trying to base here. Multiple reversal candles, big bullish engulfing candle, a couple of spike lows, doji candles, and a probe through the top, making higher highs and higher lows on the day chart. Although it's not completely convincing, and in the back of my mind, I've got the idea that the dollar is going to show continued strength against the euro and the pound. Having said that, though, I am short on the dollar yen, and we know that the Japanese are trying to defend this level here, I suppose. It's the best term. This is a 4-hour chart, just peaking up above there a few times and then dropping back. This is the current price and edging up, but very, very lackluster-like. And the reason for that is because I think it's being defended quite well. We saw 2 big attempts recently, these 2 4-hour spikes, and a few intermediate ones in between. And then since then, we've edged ever so slightly higher, but we're below 155, which I believe is the line in the sand for the Japanese. I'm partially hedged on my short position on here, and if we break and close above 155, I will fully hedge this position and let it go where it wants to go. If we look at the same pair on the day chart, this is the dollar yen day chart, there are all the tops, 1 day, 2, 3, 4, 5. Today's day number 6, tomorrow's day number 7, and it could be day 7 that we see a turnaround. If that turnaround doesn't materialize and we carry on moving higher, I will hedge the entire thing and wait to see what happens, having protected my position. I like to hedge because it buys me some time. I don't have to make an immediate decision about stop losses or profit targets or anything like that. I can wait to see how the market reacts to the new levels, and quite a lot you get big spikes or reversal candles which turn out to be false breaks. So sometimes it's better to hedge. Going across the stocks, well, we're short right from the top, still hedged now, and looking to take that short side off. I'm not convinced we're going to bounce here. Look at the NASDAQ. There's the 20-period moving average miles above us, and there's the 50, that red line. So we've got miles of space for this to retrace to the underside of this zone here. And we've also got the 100 period moving average just above us. That's the channel center line. And if you are going to be shorting this, I think 17,400 up to about 17,750 are the zones that you should be looking at. I'm already short, but now hedged, and I'll be looking to take the short side of the hedge off and then add to the long side and hope for a move back up. Now this week we've got the PCE data coming in, we've also got jobs data coming in, and we've got the Bank of Japan making the next interest rate decision on Friday. So it could be quite a tumultuous week after Thursday and Friday. Remember that inflation and jobs are two of the key priorities in the calculations for the Fed, and we've got both of those this week. We've got jobs and we've got the PCE data, which is a really, really important number. So it could be that the market faffs around underneath these moving averages, retraces a bit, edges up higher, and then collapses back down again. I think I'm tempted to keep this hedge on my short position until we get some more of that data coming out. The same thing applies to the S&P 500. I don't have any trades on this, but I did point out to my private group that if they were looking to buy S&P, bearing in mind that it could continue to move lower, and we've got plenty of support below us, but this was a good zone to buy at. It was the 100 period moving average, and we got a decent spike low into that level and a bounce back up again. So that was always more attractive to the long side than the NASDAQ. Bear in mind, however, we've got a lot of space beneath us. We haven't even retraced 38% yet, and there's the 50% fib, and it coincides with the 200 period moving average. So we've got some confluence there, and that will be mighty attractive for the shorts. That would take us down to about 4,790 or so on the S&P, and if that moves lower, we should see the NASDAQ moving down with it too. Remember, we've got earnings on tech stocks starting with Tesla today, and we've got a whole plethora of them coming in as the days and weeks progress. So we're long on Tesla. We'll talk about that shortly. And I'll be considering whether to hedge that before the earnings report that comes out after the close of play today. However, I think the downside is probably quite limited for Tesla, and we'll talk about it when we look at the chart. So nothing on S&P, that's bouncing up a bit. And I think really we're going to have to wait until Thursday and Friday to see big moves on these charts. I'm also short on Nvidia, also hedged, but long on Apple and long on Tesla. I put this Tesla chart up on X yesterday, and I think this is a pretty good buying zone. Let's look at the weekly chart. And very similar to gold and all the other things, WTI and uranium that we've been looking at, we've had a channel break, not through the top like the other ones, but through the bottom. Now, will this turn out to be a false break into this support zone? We have broken through this initial support. We've got bigger support here. And of course, we've got further support around about the $100 level. And if we get down there, we'll be revisiting the original place that I started buying Tesla on the last dip. And that was January 2023. So quite a long time ago since we last saw Tesla approaching these sorts of levels. Let's switch that back to the day chart. And then we're long on Apple as well. And this is a simple play off the support. Remember that these are hedges, the Apple longs and the Tesla longs, hedging our shorts on NASDAQ and Nvidia. So a little bit of a hedge bet, sure, but these are tricky times and tricky markets that we're in, and I'd rather be safe than sorry. Right, let's have a look at energies. Let's take center stage with natural gas and forget the rest, because this is the one that's moved. There's the rollover. This is natural gas 4-hour chart over at Black Bull, where I trade my futures contracts. We're now at 2.05. A massive gap up from 179 up to 2.05. We are seeing the Oanda ETF being dragged up. Let's have a look at that quickly. That's the one I'm long on. I'm just showing you a demo account on this page, but this mimics my live account over at Oanda, and let's have a wee look there. So we've moved into that trend line. This is just a sort of a trend line from some period back. There's the next swing high at around about $2. And we're still at 183 on the Oanda ETF. Now, what this does tell you is that the futures are probably going to come down. The Oanda ETF has not surged higher, along with my Black Bull chart like this one. But there's another complication to throw into this mix when trading natural gas, because if we go to the day chart, and this is the Henry Hub chart over at the NYMEX, and you can see that we have not rolled over. Let's zoom in a bit. In fact, you can see the rollover date is on Friday. So my broker has rolled over early. It's Tuesday today. The Henry Hub contract over at NYMEX rolls over on Friday. So there's my broker in comparison to the NYMEX. And then in comparison to the Oanda ETF, we're at a completely different price. Of course, this is a continuous contract made up of various bits and pieces, like the cash price, the front month, and various beyond that future contracts. So it's a completely different price. So I'm trading Oanda right now because there's no rollover and it is continuous. So if you've rolled over and you've rolled over into $2.05, you might consider selling the June contract. I think it's going to come back down. And in fact, this is my target area, my first target area at about $2. So we kind of reached into sort of where I'd be exiting this trade already if I was trading the futures. We'll have to see how we go. Now, WTI oil we're short on. I took some profit at the 50 period moving average on the dip down there yesterday. We rallied up a wee bit up to the trend line and back down again. I've still got 25% on this. I'll hold on to the 25 and add if we close beneath the swing low and the 200 period moving average and even below this channel line. I'll also add more shorts if we rally back up. But so far, so good. We're short from about 83.80, somewhere around there. So a couple of bucks profit on that so far. Now, cocoa. This is an interesting one because cocoa has actually attempted to roll over. We had a big hanging man candle, followed by a very bearish shaven bottom candle. And then today we've moved even lower. In fact, yesterday had a lower high and a lower close. Not a lower low, but a lower high and a lower close. Today so far has a lower high and a lower low, and so far a lower close. Let's hope this keeps moving down, and I think the crucial test will be this 20-period moving average, and the rest I've discussed in yesterday's video. You can go and check that out. There's a link on the channel. So we've covered all of that. We're long on URA and UEC. Those are kind of moving sideways, and if we go across to gold and metals, gold I covered to an extent on yesterday's video, and we're hedged on gold. But look at what happened, very similar to WTI, uranium. We've seen it on Tesla potentially now. These channel breaks followed by a pullback. So a bear trap for those shorting the top of the channel, then a bull trap for those buying the breakout, and we're back into the channel now. And as I said yesterday, the most painful thing would be a reversal here after breaking back into the channel, breaking down through support below the 20-period moving average. And if we rallied back up from here, that would cause triple damage, triple hit points, as they say in some games. So we don't really want that, and that's why I continue to be hedged, and I'll be watching this for a day or two, and probably into the PCE. And then Bitcoin, again, I covered this in some detail. I really like the way Bitcoin's looking. Let's have a look at the day chart. We've broken above the 50-period moving average, this red line. We've broken above this very crucial support and resistance level, but we are below the 20-day moving average. This is a really important moving average on any day chart that you choose to look at. And right now, we're struggling to get through it. We want to see Bitcoin break and close above the 20, and then break and close above this recent all-time high at about 73,700, and then move on much, much higher. Failing that, if we break beneath this recent low double bottom with all sorts of reversal candles, a bullish engulfing, a spike low, a break above the 50, if we don't manage to hold there, then Bitcoin could go a lot lower. And that's around about 60,000 or just below. I'm long from around about 62,500. And so far, I'm just holding it. So far, so good. And on the 4-hour chart, I think it looks okay still. Remember, on the day chart, this level that we've just moved into is the 20-period moving average. And on the 4-hour chart, this is the 200-period moving average and the 100-period moving average. Those are potentially going to form some sort of resistance in confluence with the 20-period on the day chart. And we really need to get a surge up through there and break up to new all-time highs fairly soon if we're going to do that. Right, scanning across the charts before I sign off to see anything's changed. Nothing really there, just moving down on gold still. Cocoa looking pretty good. WTI looking good for the shorts. Natural gas, I think my Oanda ETF long is going to be fine. Hopefully this will drag it up a bit. The front month has not rolled over at NYMEX, so if you're trading the pure NYMEX Henry Hub contracts, there's nothing to do until Friday, really, I suppose. But if you're trading over at Black Bull or a similar broker which has already rolled over, I'd be a bit suspicious and cautious, and in fact, I might consider fading this rally. Right, stocks have moved up a tick since we last looked at them, and dollar yen moved down a tick, as have the euro and the euro yen. We'll have a fantastic trading day. Thursday and Friday are going to be super busy. Go and check out your economic calendar, see what's happening at what time in your time zone. If you need any help, you can get hold of me on X, or you can message me on this channel. And if you find this sort of content helpful, your subscription and thumbs up and a share with your friends would be really appreciated. Thanks so much.